Hello, my name is Dee Jones, and I'm an Extension Risk Management Specialist based out of Amarillo. And I'm going to be talking today about some crop insurance programs available for organic production. I'm also going to be covering Amanda Cook's part. She is the District 1 Director for the Farm Service Administration, and I have some slides on different FSA programs for organic production. Just to give you an idea about my presentation outline, I'm going to start out talking about some of the steps that producers must take in order to become certified organic, and then just some of the different policies surrounding how crop insurance yields for organic crops are determined, and then how are the prices determined, some insurance limitations, and then I want to wrap up with just how to evaluate different insurance policies and determine what might be the best choice for you as an individual farmer. And then finally, I'll be covering Amanda's part, and that's just some FSA resources related to organic production. The steps that producers have to take in order to achieve organic conversion is not a quick and easy process. It takes a lot of time and it takes quite a bit of planning. In order to get organic status, farmers have to prove that no prohibited fertilizers or chemicals were applied for 3 years. There are some instances where land that was in the Conservation Reserve Program or fallow ground can be certified sooner, but for the most part, it is a 3-year process. While completing the transition, producers have to prepare an organic system plan and work through an accredited agency for USDA certification. In Texas, they would go through the Texas Department of Agriculture. I've included a link at the bottom of the slide that talks about how to use and work with TDA to get this certification, or they can also just Google TDA organic programs. There's really 2 things to consider when you're evaluating and trying to understand these organic insurance policies. One is how is the yield determined, and the other is how is the price determined. So the organic yield is really determined very similar to the way a conventional crop yield would be. Producers that have at least 4 years of actual organic production history will just use their own yields to determine their APH through a weighted average. Producers that don't have 4 years of organic APH must plug their missing years with county T yields, which are going to be based on 10-year historical county averages. If their policy has a yield adjustment clause, then that farmer can plug any low yield with 60% of the county T yield. Most counties have separate T yields for conventional, transitional, and organic crops. One of the things that really kind of stinks about the way these yields are established is that any yield during the transitional years do not count toward an organic APH. So for example, let's say we have a producer in Hereford over in Deaf Smith County, and he's been growing conventional corn for a lot of years. He's got a good established yield for insurance. Once he begins transitioning to organic, all those conventional yields go away from an insurance purpose, and they start using the transitional T yield, and eventually as he has more years of that transition, they'll plug in his own yields, and let's say he's 2 years out of the 3 transitional period, he'll have 2 years of his own yields, and then he'll use the T yield for the last year. But once he completes that 3-year process and becomes certified organic, then all those other yields go away, and he's got to start over with 4 years of T yields and has to basically start establishing his own organic APH. So the fact that none of those yields during the transitional years will count for an organic APH is a disadvantage in the way these things are determined. If you want to see what the T yields are for any county really in the U.S., you can pull them off of the RMA actuarial page. I've included a link at the bottom of the slide, or you can also just Google RMA actuarials. So the AIB, or the Actuarial Informational Browser, is basically a searchable listing by crop, state, and county for many commodities. The data starts really, I think the first year is 2011, and it's going to go through the 2020 crop year, or next year it'll be the 2021 crop year, so whatever the current year is. And really, it's fairly easy to navigate. You just go in there and you select the relevant information that you're wanting to look at. Basically, in our example, I selected Deaf Smith County and corn for 2020, and then it's going to give you lots of choices once you select that data. Do you want to look at the T yields? Do you want to look at the organic ones, the transitional ones, or the non-organic? It also has crop insurance costs, crop insurance prices, planting dates, lots of different tabs that you can use in order to get all kinds of both historical and current data. So let's look at an example. Continuing on with our Duff Smith County scenario, I went to the AIB page and pulled up 2020 corn for Duff Smith County. And if you look at the top, you can see how you go in and you just select the parameters, what commodity, what do you want to look at, what year. The insurance plan, they're all on there. I picked yield protection. Honestly, if I'd picked revenue protection or a lot of the other different plans, the T yields are going to be the same on most of them. And so once we selected the parameters that we want to look at, if you look at the middle of the slide, that's going to show all the different options surrounding those selections. And so the one we're concerned about right now is the T yield. And so if I click on the T yield tab, then it's going to pull up for whatever years that I designate. I selected the last 4. What were the T yields for corn in Duff Smith County? And so I'm going to focus mostly on 2020 because that's a current crop year. And TP4 and TP5, those columns are going to show you what the conventional T yields are. So conventional grain T yield in 2020 is 176 bushels per acre, and conventional silage is going to be 23 tons per acre. If we move over to columns TP9 and TP10, you're going to see the organic T yields. So organic grain is 114 bushels per acre, and organic silage is 15 tons per acre. And you'll definitely notice that the organic yields are considerably lower than the conventional yields. There's several reasons behind this, or this is basically what I've been told. Part of it is there's just not a whole lot of organic yield data in counties, and so it's hard to take a significant weighted average. Another thing is possibly, organic seed technology and a lot of the different technologies are going to be behind, and so maybe they don't yield as high as conventional crops do. But either way, just keep in mind that until you establish your own organic yield, you're going to be dealing with a relatively low T yield and NAPH. Now that we've talked about how organic yields are determined, let's move on to organic prices. Once a producer becomes certified, they can insure crops using the organic price selection. A lot of commodities have, actually probably most commodities, have both organic and non-organic or conventional prices listed on the RMA information page. And typically, talking to crop insurance agents, they say that these values are going to run pretty close to the current market price, or whatever the current market price was when they set those. Both conventional and organic prices are set at the same time. In the Texas Panhandle, it's February for the summer crops and August and September for the winter ones. To continue on with our Duff Smith County example, I pulled the 2020 corn price sheet off the RMA actuarial information page. And if you look down here at the bottom, it's going to show the prices that were set for both conventional and organic crops for the 2020 year. If you look at columns 4 and 5, it shows that for grain, conventional grain, the price is $3.88 per bushel, and for conventional silage, it's $34 a ton. Then we can move over to columns 9 and 10, and that's going to show the organic price, which is running $8.67 a bushel for the grain and $76 a ton for the silage. And one thing to note, if you remember back with the T yields, the organic crops got considerably lower T yields than the conventional ones did, but it's kind of the opposite situation when we look at prices. The organic prices are running over 2 times that of the conventional. So where a organic producer may lose a little bit from the yield side from insurance, they are going to gain quite a bit from the price side. That being said, if an organic price is unavailable in a particular region, then the insurance price is going to be the same as that of conventional crops. However, if a producer has a contract in place before the insurance purchase deadline, which that's going to be March 15th for summer crops, then they can insure that commodity at or near the contract price through something called the contract price addendum. This option is available to really any grower with a contract price that is higher than the RMA organic price. And it's also available to transitional producers. We're going to talk about that here in a minute, but that's a very important addition to that contract addendum. So basically what the contract price addendum says is it allows certified or transitioning producers with written contracts the ability to insure their crop at or near the contract price. The reason we say at or near is this addendum does have a cap. It's called the maximum contract price. This cap is going to vary by crop, but it's typically about 2 times the conventional price or 1.5 times the organic price. If multiple contracts exist on the same commodity, then a weighted average is going to be used. And so once again, I pulled up the RMA actuarial for 2020 corn in Des Smith County. And if you look down here, it's going to actually show what the maximum contract price factor is. And that is going to be what the price addendum levels are going to be set at. So if you notice, whether we're talking about grain or silage or even white organic corn, all of those maximum prices are going to be 1.5 times the maximum organic price. Just like any other insurance product, organic insurance does have some limitations. One of them is no drift coverage. And really, this limitation doesn't just apply to organic policies, it affects conventional policies as well. It's just that organic crops can be more effective. Basically what this means is pesticide drift or contamination from genetically engineered crops could cause the commodity to lose its organic premium in the marketplace. And like I said, these events are not covered by crop insurance. Another limitation involves prices and yields. While the data is improving, not all counties have separate yield and price data for organic versus non-organic crops. Also, during transition, producers have to use the transitional prices and yields unless they have some kind of contract and can take advantage of that contract price addendum. And when we look at the RMA actuarials, you will see that those transitional yields and prices are really not an optimal situation. Just to put that in perspective, I pulled up the actuarial page for 2020 corn prices in Des Smith County. And if you look at the bottom and we check out the transitional price, if you notice it matches the conventional price. So $3.88 a bushel and $34 a ton. Then if I pull up the transitional yields, those are going to match the organic yields, which are 114 bushels an acre and 15 tons an acre on silage. So really, if we think about it, we're using the lower price of conventional, and we're also using the lower yield of organic during that transitional period. So it's really the worst of both worlds. And producers really need to think about how to evaluate the policy and what might be the best in that particular situation. So how do we evaluate these different policies? Well, first, it's important to realize that price volatility and production risk affects organic producers just as much, and in a lot of cases more, than any other farmer. And that's why it's very important for producers to spend time reviewing their crop insurance products and deciding what type of protection they seek. And I cannot emphasize this enough, a good relationship with a knowledgeable crop insurance agent is a must. The reason I say this is just like everybody else in the world, I am working from home right now, and this was a view from my home office this morning. It's April 14th, middle of spring, and we've got 2 inches of snow on the ground. This weather situation is not going to be good for our winter wheat that was starting to finish up, but it's also not going to be good for our early planted corn. So literally, in about a 24-hour period, the Texas Panhandle weather has likely wiped out 2 crops. And so that's why it's very important to have a good relationship with your crop insurance agent, because you're likely going to be talking to them a whole lot. All right, so what should a producer consider when signing up for insurance? Well, there's lots of different options, but first I want to point out that the sign-up deadline for summer crops has already passed in my region of Texas. That was on March 15th. The next opportunity farmers in this area will have to sign up for insurance will be for the winter crops on September 30th. That being said, there's lots of different things they need to think about when they go to sign up for any kind of policy. One is let your insurance agent know if any of the insured name changes. Let's say you get married or you get divorced, or maybe you're in a partnership and your partner decides to leave or retires or passes away. Your agent needs to know about that. Another thing that we're seeing more and more frequently is that there's often sub-beneficial interest or landlord changes. Landlords are getting older, and as they pass away and that land goes to maybe their kids that are scattered all over the U.S., then it takes a while to track all those different landlords down and get them to sign the appropriate paperwork. I was talking to an agent yesterday, and she said in the last 9 months she's dealt with 4 different landlord changes. And so it can happen. It's been happening more and more often. Another thing, if you have any new countings or crops, obviously that needs to be factored in. An important one, especially for organic insurance, is a written agreement. Basically, you need to check with your crop insurance agent to see if your organic crop is even insurable. A lot of them are uninsurable in particular counties. Maybe they just don't have enough history to offer that type of insurance. If that is the case, if your crop is uninsurable, then your agent will have to submit a written agreement to RMA in order to get that crop covered. And I cannot emphasize this enough. Do not wait until the day before the deadline to let your agent know that you're going to need a written agreement, because it's not going to happen. Give them as much notice as possible to submit an agreement in order for you to give an answer back by the deadline. Another thing to think about is what type of coverage do you want? Do you want revenue protection, yield protection, whole farm? There's lots and lots of different choices. What kind of coverage level are you looking for? They range anywhere from 50 to 85% or even higher. Obviously, though, the higher the coverage level, the more expensive the premium is going to be. There's also quite a few optional endorsements. There's SEO, that's the supplemental coverage option that was written in the last farm bill. That just allows you to add some extra insurance on top of your regular crop insurance policy. There's stacks insurance if you're cotton. There's also the contract price addendum. That's an important one to make sure that's written into all your organic insurance policies. If you want to go really cheap, there's always catastrophic coverage. That's just going to run you $655 per crop per county. Like I said, it's very inexpensive. That's kind of the positive. The negative, though, is it's going to basically have the least amount of coverage of almost any crop insurance policy. And then again, just keep in mind, you have lots of choices in agents and providers. Make sure you pick one that you feel comfortable with, that's knowledgeable, and that you're prepared to have a long-term relationship with. Once again, to demonstrate crop insurance choices, I'm going to use our organic corn example out of DeSmith County. We already know from pulling up the RMA actuarial page that the 2020 base price for certified organic corn is $8.67 a bushel on grain and $76 a ton for silage. The transitional price is going to be the same as the conventional. That's going to be $3.88 a bushel or $34 a ton. And so when you start to think about what type of crop insurance you want, the advice I can give you is begin with the end in mind. Think about what you want the end result to be, especially if you have a loss as you start to make these policy choices. So maybe you ask yourself, do I insure for marketing or to make my banker happy? What I mean by that is a lot of bankers, in order to get an operating note, will require their farmers to get at least 65% coverage level. So do you want to go really cheap just to try to make the banker happy? Or maybe you want to make sure that you have a policy that's going to cover you in the event of a market or price loss. Or maybe you want it to have a policy that's good enough with a high enough percentage covered that it's going to cover all of your production expenses. Well, maybe in that case, you want more like a 75% revenue policy. So think about what you want the end goal to be. Another choice might be, typically crop hail insurance is going to be cheaper than something like multi-peril. And so maybe you get a lower coverage level for the multi-peril and then you buy $500 or $600 an acre in hail insurance to make up the difference. Also need to think about, do you want to insure for grain or silage? Like I said before, up in the Texas Panhandle, the sign-up deadline for summer crops has already passed, but your planting intent and your planting reported acres isn't until July 15th. And so you really have until then to decide whether or not you're going to cut that corn for grain or for silage. If you do decide to go silage, insurance agents do recommend that you have that grain appraised before you decide to cut it for silage, just because it will make the APH at the end of the year a little bit easier to calculate. You've seen this before, but just to remind you, once again, this is what the RMA T yields are for organic corn for DeSmith County in 2020. For grain, it's going to run 114 bushels per acre, and then for silage, it's at 15 tons per acre. What this slide shows are sensitivity tables for both grain and silage. And as you read from left to right, first you're going to see the different levels of coverage, anywhere from 50% to 85%. Next, you're going to look at what is the revenue protection policy premium. We just pick revenue protection as an example on a per acre basis, starting at 50% coverage and going all the way up to 85% coverage. The next is going to show you the bushels protected under each of the different coverage levels. And then finally, what is the total dollar value that's going to be covered from anywhere from 50 to 85%. The main thing I want to point out for here is as you increase your level of coverage, those premium costs per acre go up substantially, anywhere from $11 an acre at the 50% level to almost $90 an acre at the 85% level. And really the bushels protected, while as you go higher, it does help, but because the T yield was so low, even at 85% coverage, you're really only dealing with about 97 bushels. This is a 2020 corn budget that I pulled off the Amarillo Extension website. Really, it's mainly for conventional corn, but I tried to adjust it somewhat for organic. Just two things I want to point out. One is that we budgeted in a $50 per acre crop insurance cost. And then two, the total production cost or variable cost in 2020 for organic corn, we're going to estimate it somewhere around $692 an acre. So let's assume a farmer wants to grow organic corn for grain in Desmond County in 2020. We already know that the T yield for this area is 114 bushels per acre, and the organic price is set at $8.67 per bushel, and that we have a $50 per acre crop insurance budget. So having these assumptions will allow us to run some different scenarios. The first thing that I want to look at is the higher cost of multi-peril worth it, or should a farmer buy some cheaper crop hail insurance? So I called an insurance agent yesterday, and for a DD20 crop hail insurance policy, basically what that means is that a farmer will only get a payment or an indemnity when the loss is greater than 20%. For every $100 in coverage, it's going to cost $5.85 per acre. So let's buy quite a bit of crop hail insurance. Let's say maybe $600 an acre. That would get real close to covering our production expenses. That's going to cost a producer $35. And then we can use the other $15 to buy however much revenue protection we can afford on that budget. So if we refer back to the sensitivity table, that's going to allow us to buy about 55% revenue protection policy for a coverage of $544 an acre. And then we can add that to the $600 per acre coverage in hail insurance, which will be a total coverage amount of $1,144 an acre. And it's going to cover bushels to market of about 63 bushels, which is 55% of the T yield. So that would be one option. The other options is, let's say that Hereford doesn't get a whole lot of hail, that maybe this farmer is more concerned about covering his production expenses and any kind of volatility in the market. So instead of taking out a lot of hail insurance, he's going to take out a 70% revenue protection policy. That's going to cost about $33 an acre and more or less assure that $867 per bushel. And that's going to be a total coverage of $692 an acre. We still have $12 left over that can be used to buy up to $200 in hail insurance. And so that's going to give us a total of coverage of $892 an acre. But it is going to cover more bushels of about 80 bushels or so. So basically, do we want a little bit higher dollar amount coverage but less bushel coverage? Or do we want to cover more bushels and have our price guaranteed but not have quite the dollar amount covered? And so that's really just an individual decision. You know, does it hail in your area? And once again, what is your end goal? And that just kind of shows different options that you can look at surrounding different policy decisions. And just a reminder, if you do have a loss from hail or flooding or drought or anything else, make sure that you notify your crop insurance agent as soon as possible. They have a limited amount of time to work claims. The rules say within 72 hours. This is especially important with irrigated losses. It tends to be a higher dollar value. And when they're having to report the date of the loss and exactly what happened, it just makes the burden of proof a lot easier if they see it quickly. And finally, just once again, communication with your agent is key. Talk to them often. Ask before you do something. If you decide to grow grain instead of silage, let them know at the beginning, not at the end. And then communicate losses or any other issues you might have as they happen, not 2 or 3 months later. And then finally, verbalize your expectations. I work with crop insurance agents very closely, and the good ones are really, really good resources. You can go in there and say, hey, I've got to spend, $50 an acre is my maximum budget, and I want to protect my yield. That's my key priority, or maybe it's my price, or maybe it's something else. I want to keep my banker happy. Let them know what you expect out of that policy, and they can sit down with you and basically pull all these different options together, and y'all can talk through and find out what is the optimal decision for your operation. So I'm going to wrap up with a few slides from the Farm Service Agency. Originally, Amanda Cook was supposed to be here to cover this part, but since we're doing it online now instead of in person, I told her that I would talk about her slides. So there's just a few different assistance programs for organic farmers that they can take advantage of through FSA. One has to do with NAP insurance. That's basically the non-insured crop program. Another one is marketing assistance loans. There's also farm storage facility loans, low interest loans. And then I'm just going to give a reminder about some acreage reporting and the possible renewal of an organic certification cost share program. The Non-Insured Crop Disaster Program, otherwise known as NAP, is basically a financial assistance insurance type policy for crop losses due to natural disasters. It will cover anywhere from 55 to 100% of the average market price for organic crop losses and 50 to 65% of the expected production due to natural disasters. There's an annual service fee of around $325 per crop or $825 per county. That's going to be at the 55% coverage level, and obviously premiums go up as the coverage level increases. Now, I do want to remind you with this program is it is not written through a crop insurance agent. You'll need to go through your FSA office. Some of the eligible causes of loss under NAP include damaging weather such as drought or freeze or hail, excessive moisture, excessive winds, hurricanes if you're not in the panhandle, earthquakes and floods, and then any kind of conditions relating to damaging weather or natural occurrences such as excessive heat, plant disease, or insect infestation. I do want to remind you, though, that damaging weather or adverse natural occurrence has to happen during the coverage period, before or during harvest, and must directly affect the eligible crop. Also, just a reminder, in order to be eligible for any kind of FSA program or crop insurance, you have to turn in your summer crop acres to your local FSA office by July 15th, and you have to report your winter crop acres by January 15th. This is important because it allows FSA to fill out their Form 578. That is also going to be the time that you want to report your organic acres to FSA. In order to have these acres show up as organic on their Form 578, that's going to require you to submit your organic plan, your OSP, any kind of certificates or documents from certifying agents, maps of identifying each field that include the buffer zones. And you'll also, if you're going through the transitional period, that's going to require you submitting an organic plan as well, and a list of crops that are grown during that 36-month time period. FSA also has a lot of really good loan programs. I work with Farm Service Agency lenders a lot through another program that I oversee called Farm Assistance. Basically, we do a lot of training for their borrowers, and they have a lot of attractive packages. A lot of them are especially targeted to younger farmers or minority farmers or high-risk producers. There's different options for lots of different programs. Some of the loans that they offer, one of them is the marketing assistant loan. That provides interim finance while market prices are lower. So a good example of this is back in January, I did quite a few cotton market outlooks. At that time, cotton prices were in the low to mid 70s. Overall, they looked pretty good. Fast forward 2 months to early March, the pandemic hits, and suddenly cotton prices are in the low to mid 50s. And so if a producer took out a marketing assistance loan, that would give him or her an additional 9 months to hold the crop in hopes that the prices will improve. Okay, they also provide loans to build storage facilities. You can finance those for up to 12 years. Those are basically just low interest financing to build or upgrade any kind of storage type system. They have low interest loans for routine operating expenses that last up to a year. Farm ownership, you can finance those for up to 40 years. Or they also have loans for construction or improvement of buildings, and those can run anywhere from 7 to 12 years that you'd have to pay them back. And like I said, I work with FSA a lot, and if you qualify for their programs, you're going to see interest rates that are significantly lower than anything that you can get in a bank. So I highly encourage that you, if you think you might be eligible, go to your local FSA office, and they will give you the name of the right person to talk to. The last thing I want to talk about is the Organic Certification Cost Share Program, or OCCSP. We don't know a whole lot of information about this yet because the final rule publication and funding for 2020 has not been released. But what it looks like is it is a cost share assistance program for obtaining or renewing certification under the National Organic Program. It covers up to 75% of certification costs, not to exceed $750. So it's important to watch your local and your state FSA newsletters and bulletins for updated information about this program. Amanda also wanted me to remind everybody that they do have a website called farmers.gov that provides a ton of information about all kinds of different FSA programs and upcoming deadlines and helps you find where your local office is. So that's just a really good resource to be aware of. In conclusion, there are many unique challenges that organic farmers face, especially during that time of transition. It's important to put careful thought into all your different insurance choices and come up with the optimal decision. In order to do this, you have to establish a good relationship with a well-informed crop insurance agent. That's very, very important. Be sure you take advantage of FSA programs when they're available and also utilize extension tools to aid in your decision making. I run a program called Farm Assistance. It's basically a one-on-one financial consulting program. We really sit down and we run a bunch of different scenarios and we try to come up with an in-depth financial analysis that you can take to your banker in order to obtain financing. It's a really good program, especially right now with all the uncertainty in the markets. I also conduct QuickBooks workshops. They're usually in person. I'm working on getting them online right now. We've got some marketing workshops coming up next January. And then any crop budgets or profitability analyzers or graze out analyzers, we have a lot of different decision tools, and those can all be found on the amarillo.tamu.edu website. So thanks for being here today and for listening to my presentation. If you have any questions, feel free to contact me. Obviously, I'm not at the office right now, but you can catch me on my cell phone and you can always email me. Thank you and have a good day.